Hey Hard Forkers, we're in Mae Fung Luang Garden in the north of Thailand. Today we're just going to have a quick chat about exchanges and their volumes. There's been some news that many exchanges are fudging the numbers, basically reporting higher volumes than they actually have. We're going to tell you what you should look out for, where you can go and get more information, both on the Hard Forking website and others. You should be aware of this. It could be something that blows up in your face in the near future. So check out your exchange properly. We'll have all the information for you in this clip and below. Thank you.
All right, thank you very much, Sean. We're here to talk about exchanges and volumes that might be manipulated on exchanges today. We got my good friend Paavo here, so what's coming up is we'll have some exchanges that are reporting extremely high volume for the customers that are actually using the exchanges, and this could have an impact on volumes and what people think about how much is used in trading. And we don't want to really point on any exchanges ourselves. I think you can look on blockchaintransparency.org, and we'll post the link in the comments as well. And there you can see and draw your own conclusions from these fake reported volumes.
Yeah, so can you explain a bit more, like why are they doing this?
So what they're really doing, if this is accurate, it's called wash trading, and this means the exchange trade their asset between their own accounts to increase volume, and this will show, there's more volume. People might think this might be a good investment. They might do this to get investors in. There's many reasons why they do it, but mainly they want to show that the trading activity is big and they can lure more customers in. And I think last year CoinMarketCap took out a couple of Chinese exchanges from their reporting because they were reporting a lot of wash trading, which is basically inflated and fake trading. There's no buyer, the buyer and the seller are the same. And this is just to create some attention about your exchange. Maybe you get more website traffic and stuff like this.
And volumes are pretty important indicator when trading. So if someone's seeing a rally with higher volume, it sends a signal. Now might be a good time to buy. But if it's fake, then obviously that's distorting the market and distorting the price signals.
Of course, and it's not it's not honest, and there should be some better transparency in showing the real trading volumes. And like I said, blockchaintransparency.org, it's a very good website where you can have a look and you can draw your own conclusions of how many active users they have and how much a user would actually have to trade for in 24 hours. So just to throw some numbers out there, there's one exchange that have about 350,000 daily users, and their trading volume per user is about $370, which is, that's pretty normal, I would say. And then you have an exchange that has about 5,000 users, which reports $230,000 in volume per customer or per user. And for sure, you see, this seems very inflated, and that's kind of dangerous also. If these exchanges might get a lot of customers to come in, deposit money there and trade, and maybe they have an exit strategy where they scam the customer, or the exchange might get shut down because they show so much fake numbers. So anyway, you take a risk when you're trading on exchange. So you should be doing a little bit own research, so you don't get stuck in either the exchange gets shut down or it gets scammed by the exchange. And I believe this is really important, and since crypto space has so far been so unregulated, there's a lot of people trying to use this for their own benefits.
Okay, we've put Pebble on the camera now. My arms are hurting holding it up. So Chris, look, in summary, obviously there's some people saying that exchanges are pumping their volumes at the moment. In a nutshell, what do people need to go and check out?
I mean, they really need to check that the exchange are really not pumping up their own numbers.
Yeah. What was the website again for that? We'll put it underneath this video, obviously.
Yeah, it's called blockchaintransparency.org. They have good metrics there, which they show how they calculate all these numbers. So I would recommend anybody that, you know, even trading small amounts, because it's all relative to how much you actually have in holdings. But you know, this is something that could affect the whole market in itself.
Yeah.
It's been some articles in Forbes about it also. So you know, I think in general, I hope this will not spiral out of control and we'll see a lot of fake exchanges. But during this time in the market, I think you'll see like a lot of ICOs going under, and I think we will also see some exchanges going under. So it would be a good thing to not be on an exchange that has warnings or suspicious trading.
Yeah, do your homework. If you go to hardforking.com, there's many reviews of exchanges there. We're constantly updating those. We'll also report closely on this as well. So, you know, check that out. Do your homework. Make sure you're on an exchange that you've really looked into and you're comfortable with. I think we're close to some of these disappearing on us, so now's the time to act. Anything to add?
No, I agree. Just, you know, do your due diligence, whether you and check out the exchanges. And I mean, there's kind of couple of exchanges that we could recommend, because maybe not because liquidity or volume, but these are honest, true exchanges where you actually hold your private key or part of your multi-signature wallet, so your funds can't get hacked. Nobody can actually move your coins without your consent. And we will also post this in the description, but they are BISC, for example, is one, and HODL is one. And they're fairly new exchanges, so we got to give them some time, get the liquidity up and the volumes up. But in the end, you want to be in control and not let a third party control your keys, because not your keys, not your Bitcoin.
Yeah, and ultimately don't keep your money on exchanges unless you're actually trading that particular amount. We've just signed up for Trace Mayer's initiative on the 3rd of January. You want to check that out, the website's down below as well, but Chris, maybe a quick description of what's happening there and why.
Yeah, so Trace Mayer made an initiative where we kind of show that we are in control of our keys, and it's called Proof of Keys. Website's called proofofkeys.com, and the whole idea is that it's also Bitcoin's birthday, the 3rd of January, and the whole idea is that we actually show that we are in control of our Bitcoin. And this means, you know, we can withdraw our coins into our own holdings. It doesn't mean, you know, the whole idea is not messing up the exchanges and ecosystems. Of course, you know, you can deposit your money back into the correct exchange and keep on trading. But, you know, just during this time, celebrate the Bitcoin birthday, and it's a peer-to-peer electronic payment system. So, you know, we should be in control and not let third parties be in control, because then we could just use PayPal.
Absolutely. PayPal, on that note of what's the news there that's just broke as well?
Yeah, Coinbase is now allowing cash withdrawals to PayPal, so that, you know, that's a good way. It's a good way. I think. I mean, Coinbase has its own issues, but I think it's a good way to actually getting out of crypto or Bitcoin if you sold some, and actually having some cash at hand. You know, then Coinbase has its issues, PayPal has its issues, but we need more ways to get our money out when we made some profit, and we need easier ways to get in also. So I think in general the initiative is pretty good, actually.
Yeah. Okay, so I think that's all for today. Keep checking us out. We've got some really good content coming up from some pretty amazing places while we're in the north of Thailand. So from me, speak to you soon.
And remember, not your keys, not your Bitcoin.
Later.